250 million euro Dutch residential activities, 200 million Berlin residential, and the rest something in Japan.
Oh.
And 40 pounds sterling at the Harry Potter shop at King's Cross, unfortunately, after the session here.
Okay, very good. Well, I'll give you the £40 as a management fee. That's fine for the Harry Potter one. Good. David, where would you invest my money?
I think it probably depends on what your return objectives were and how it would fit into the wider portfolio, really. But I suppose I'd look at it partly from a sort of macro basis, but also from a sort of bottom-down basis, and probably on the basis it's bloody hard to find off-market deals. I'd probably look to team up with some sort of operating partner, and maybe, where we're seeing a reasonable amount of activity at the moment, so there's potentially less weight of capital, is in areas like, in the south, apart from Spain, Italy, Portugal, and then we are seeing things in the Netherlands, against Netherlands, residential, the Nordics. So again, we're seeing a further increased interest in Germany on the basis that there's actually quite a lot more distress in Germany than people think because of the sort of bank situation, and also a view that insofar as QE is coming to Europe and Germany later than it's come to the UK, it will have the same sort of knock-on effect in terms of real estate capital values.
Okay, interesting. All right, so we've got some Dutch and Germany as well as Japan at the moment. A bit of Nordics. Will?
I'd split it. I'm assuming I'm a balanced investor, so not high risk or low risk or whatever. I'd definitely put a couple of $100 million into non-performing loans in Europe, so I think that's a really interesting strategy, and there's still a lot of money to be made, and it's kind of quietly happens, although there's some press about it over the last 12 months, but it's still, the mess is still being sorted out. 200 million debt or equity into the second tier, very carefully selected markets in the US. Okay. We were looking at a bunch of deals with a client the other day, and there's a part of that market which is got less capital competing in it. And the other 100 mil, my last 100 mil, is going back to my roots as a shed agent about 30 years ago. So I like European logistics as a defensive strategy as long as they're well located. Because the box design, etc., is pretty standard now. But put it in the right place and it will always let.
Okay, good. So logistics, second tier US and NPLs.
Yep.
Excellent. Martin?
Well, 500 million euros. Was it dollars? Euros? Doesn't
Euros.
matter. It's the same thing.
You can leverage, I suppose, if you want to.
No. As was said before, there's so much equity around, so you can't leverage too much, otherwise you don't deploy the money. It's a fifth of our average annual deployment, 500 million. Could be one nice building, like the one we bought in Houston recently. But I would actually not split it too much. I would go for the outperforming economy, which is the most robust, which is the US. And within the US, I'd look for outperforming second-tier markets. I think I would go back to Austin, not because it's the world capital of music as well, but it's actually quite cool. It's got, it's got government, it's got high tech, it's got university education, everything.
Everybody's talking about Austin now, aren't they?
It's fantastic. It's fantastic.
I used to think it was
So I'd split the 500 into 3 deals in secondary US cities. Maybe old economy tenant building in a new economy market like Silicon Valley, that kind of stuff. Be a bit different, from the mainstream. That's what I would do.
Okay.
But that's what I'm doing at the moment.
and if I forced you to do it in Europe, where would you do it?
Given where we come from, we don't do residential. Otherwise, I would say residential would be an interesting option. I'd go to, despite what I said about the Brexit fear, I'd probably go to regional markets in the UK. I wouldn't go to France. Don't see there any improvement. I suppose a couple of, because we know the market so well, a couple of tertiary even cities, third-tier cities in Germany, where there's the Mittelstand, the SME kind of economy, which is quite strong.
Thanks very much to the panel, and thank you for coming. Thank you.